Hello, and welcome to our second series of investing resources. Last week, we talked about how to unlock your home equity and other available loan options you can take advantage to get started with the real estate investing. And today, we have a very special guest that will help us to unlock your retirement plans and identify its potential to help you with investing not only in real estate but also in cryptocurrency. By the way, my name is Princess Escoto. I'm the co-founder of the Brickstone Investment Group. And just to have a quick overview of our company, we are acquiring apartment buildings here in Southern California and also out of state. So we help individuals to grow their real estate portfolio, either in residential or multifamily assets. And one of our focus is to source, manage, and grow the multifamily investment portfolios of our investors to create generational wealth for their family. So with that said, one of our partners, Micah Hillis, will be co-hosting with me today. He's having some technical difficulties, so I'm just going to show his pictures so at least you kind of see how he looks. But anyway, hi Micah. And
Thank
welcome.
you, Princess. Hello. Yeah, forgive me, guys. I don't have my video going today. I am in a new location, and unfortunately, my connection's not super strong. So, just to help with keeping this seamless, I've taken my video off. So, forgive me for that. But yeah, awesome introduction, Princess. Super excited to be here. Before we jump in, I just quickly, again, I want to mention, out of respect for our speaker, we'll keep everybody muted until the end. But don't worry, we'll do a Q&A. And if you miss anything, we're going to have this recorded. So we'll send out the links. And with that out of the way, I want to introduce our speaker for today, Jeff Minick. Jeff is a certified IRA professional with over 10 years of experience in self-directed IRA industry. Currently, Jeff's the Director of Business Development at Directed IRA, a leading provider of self-directed retirement accounts that provides best-in-class customer service, fast investment processing times, and low fees. Jeff oversees strategic relationships with real estate syndicators and investment sponsors, helping them raise capital through the establishment of self-directed accounts for their investors. Jeff's assisted thousands of individual investors with the creation of self-directed accounts, facilitates $1 billion in alternative investments. He holds a bachelor's in business from Cleveland State University. And Jeff loves spending time with his family, traveling, skiing, cooking. Jeff, tell me, what is this self-directed IRA stuff all about? Take it away, man.
Thank you, Micah, and thank you, Princess. Yeah, happy to jump in and explain exactly how you can use your retirement account to invest in things that you're comfortable with, something that you know. So the kind of driving theme here today is take control of your retirement account. If you're not a stock market guru, you enjoy real estate or cryptocurrency specifically, why not invest in those areas? Something that you truly understand and want to invest into. So that's what we're going to explain today, how you can get your retirement funds invested in these different assets. So let's go ahead and get started. I'd love to just share some slides with you here. As I talked about, what is the topic today? It's how to unlock those retirement plans, how to invest in real estate, notes, private companies, private funds, private assets. So all of these different asset classes are available to you. Now, if you have an IRA account at Fidelity or Schwab, or you have your 401k plan through your employer, you're probably very limited as to what investments you can make. So this conversation today is all about unlocking those retirement funds, getting them in a position where you can have more control over them and invest in what you truly want to. Now, I do have to give a disclaimer, so I have to be put on my kind of lawyer hat here, but just so everyone's aware, any of the information we're discussing today, this is for educational purposes. So all parties that listen to this webinar or watch this are strongly encouraged to consult with their attorneys, accountants, other financial professionals before they enter into any type of investment. With that out of the way, let's dive into the fun part of the topic and the presentation here today, taking control of your retirement account. You can tell we've used this, this is our trademark here, literally. Take control of your retirement. Invest in what you know with the self-directed IRA. Now, I talked about having your 401k plan through your employer, or having your IRA account with a company like a Fidelity or a Charles Schwab, one of those large institutional players. If you have a retirement there, you're probably limited to investing only in the stock market. So by setting up an account with a company like Directed IRA, you'd be able to access investments into cryptocurrency, real estate, other alternative investments, or investments that aren't correlated to the stock market. So Directed IRA is a self-directed IRA custodian that specializes in this industry and in this area of investing. Our vision statement is to be the leader in the self-directed IRA industry. We understand that we have competitors and clients have many choices as to which custodian they use. One way that we kind of measure ourselves against our competition is the service that we provide. Sure, we provide the ability to open an account, so we sell that as a product, but really at the end of the day, we're a service provider. When clients are investing their retirement funds, they often have questions, especially if they're not investing through an advisor or into the typical stock market. It's maybe the first time they're moving retirement funds around. That's oftentimes individuals' life savings. They want help, support, and that's exactly what we provide. Whether it's getting your account open, getting your account funded, or getting your account invested, you're going to have excellent customer service every step of the way. And that's what we pride ourselves on. That's very evident by our Google reviews. So if you do any research on Directed IRA, you'll see we have a number of 5-star verified Google reviews, excellent ratings there. And those are true clients providing their true insights as to their experience working with Directed IRA. Directed IRA is also a licensed and regulated custodian, and that's an important distinction in our industry. There are competitors that are third-party administrators. They are not licensed and regulated the same way as a custodian would be. We're also audited and examined, and we are founded by two of the industry experts, Matt Sorensen and Mark Kohler. You may have watched some of their videos on YouTube. You may have read Matt's book, The Self-Directed IRA Handbook, the best-selling book on the topic in the industry. And essentially, Matt and Mark are full-time tax attorneys that have years of experience working in the space and decided to create their own trust company. They used to refer clients to many of our competition and just decided that those competitors weren't doing things correctly. So they went about setting up their own trust company to provide better service and to assist their clients.
Jeff, I'm going to butt in real quick.
Sure.
I wasn't aware of you guys had those guys on your team, but I'm actually familiar with Mark. I'm subscribed to, I think, his channel on YouTube. He puts out some incredible content. The guy is brilliant. So very cool. Just excited to see that.
Yeah, Mark has a pretty large following on YouTube, and he's really a proponent for the small business owner. So Mark is a partner in the law firm KKOS Lawyers. He's also a partner in the CPA firm Kohler & Air, and he's also the CFO of Directed Trust Company or Directed IRA. So very smart individual, loves to provide content on just financial literacy in general, especially for small business owners. And then also a lot of great content about using your self-directed IRA to make these investments we're going to be discussing today.
It's awesome.
Now, self-directed IRAs, you may have heard of this. We ripped some self-directed IRAs from the headlines here. When Mitt Romney was running for president, I think a lot of people heard about him having a very large IRA account, over $100 million. He was able to use a self-directed IRA to invest in early startup companies and really build the retirement account. So when people heard about Mitt Romney and the size of his IRA, they were impressed and wanted to know how he did it so they could duplicate that themselves. We're going to talk about how to do that exactly today. Peter Thiel more recently was in the headlines for having a $5 billion Roth IRA. So kind of taking on the Same strategies that Mitt Romney was using of investing in early stage companies, private companies that weren't publicly traded on the stock market yet, was able to use his self-directed Roth IRA, make investments, and that is a Roth IRA. So that is $5 billion of tax-free growth that's been realized in that account. Very impressive. And again, these strategies that Mitt Romney, Peter Thiel, Max Levchin were using to grow their retirement accounts, that's exactly the same type of strategy that you can use for your own retirement account. Now, we should lay some ground rules. We have to lay out what your IRA cannot invest into and who it cannot invest or transact with. So the government does give us a few items. The IRS says there are certain things you can't hold as an investment in your IRA. That includes collectibles such as art, stamps, alcoholic beverages, firearms. You can't invest into life insurance contracts or S corporation stock. Outside of that, you can really get creative. As we talked about, real estate, that's pretty popular for our clients. Private companies or private funds, real estate syndications, cryptocurrency, promissory notes. Those are the big ones that we hold and most clients use the accounts for. But clients are investing in all kinds of unique opportunities. We had clients invested in cattle with their IRA or Super Bowl tickets, concert tickets with their IRA. So you can really be creative with these kind of principles that we're going to teach you today and invest in, again, what you know so you can take control of your retirement account. There are some rules about who your IRA cannot transact with, and that is the disqualified persons. So if you're looking at this slide here, when you're looking at disqualified persons, it's up and down your family tree. So you as the account owner, you can't invest with your parents, children, your grandchildren. If I had, let's say, my parents and they had a rental property and I wanted to purchase that from them with my IRA, that would be disqualified. My parents own the property, they're disqualified from my IRA, so I could not transact with them. And that's not to say that all people are disqualified in your family, because brothers, sisters, aunts, uncles, nieces, nephews, they are not considered disqualified. So if my brother owned that same rental property, I could purchase that rental property with my IRA from my brother, but I wouldn't be able to do that with my father or my mother. The different account types that we offer here at Directed IRA are quite diverse. So if you have self-directed IRA accounts, they could be self-directed traditional IRAs. They could be self-directed Roth IRAs. You could self-direct your health savings account, or maybe even a solo 401k if you're a small business owner. So we have for different account types here, they all have their specific purpose, but just realize, depending on what types of retirement plans you have, we can likely accommodate them into a self-directed account that'll fit and work for your needs. We also have many different strategies, and this is the benefit of being founded by tax attorneys. For individuals that are high income earners and can't contribute directly to a Roth IRA, they still can through a backdoor Roth IRA strategy. We also have clients that are using the checkbook IRA LLC model to more efficiently manage their real estate investments. I'll get into that structure a bit later, but just realize there are a number of different tax strategies once you create these accounts that you can utilize and take advantage of as well. So happy to cover some of those today with you. The first investment I want to cover with you guys is when we set up these self-directed accounts and we're ready to invest in real estate. There's certain things that we need to keep in mind. The IRA is the investor, not you as the individual. So I usually tell clients, you want to think of the self-directed IRA account almost like an entity unto itself. It's not you investing, it's the IRA. When I title my documents, I'm working to purchase a property, the IRA is going to be on title as the owner, not me as the individual. So it's important that we get that vesting titling correct, and we can help you with that. The other thing you want to consider is that once I invest into real estate, I need to maintain it. What if I'm collecting rent? I'm paying expenses, utility bills, insurance, taxes. All of that activity I have to run through the IRA account. Again, it's not me that owns the property, it's my IRA. So any expense related to this property, it's going to be paid for from that same retirement account. Just like any profit that's generated from renting the property out or selling it, it's going to go back to that account, not to me as the individual. If I'm investing in real estate, I can still use a mortgage or loan on the property. So just like if I'm investing personally, I can still use leverage by obtaining financing for this investment. I have to use a special type of loan, a non-recourse loan, to obtain this financing, but we have a list of non-recourse lenders that specialize in this, and happy to share those resources with you. The other thing to consider, this is IRA owned. So this real estate that we're investing into with our self-directed account, it's for investment purposes. This is not a primary residence or a vacation home for us as the account owner. This is truly a rental property or an investment property. You could purchase real estate to fix and flip it, and it doesn't have to necessarily be residential. You could invest in residential real estate, commercial real estate, industrial real estate. We talked about single family homes, apartment complexes, multifamily. So really, real estate can be any number of different investments, depending on your strategy and how you want to apply this. And you can still use leverage if needed. This next slide gives you a basic overview of the process here. We can see that off to the side on the left, we have the self-directed account. It is going to purchase the property there in the middle, and it is going to pay and receive all of the rent and pay all the expenses. So really everything ebb and flows from the IRA in this scenario. Now, if we're using a non-recourse loan, we're using some financing in this situation, the non-recourse lender is going to loan to the IRA account, not to you as the individual. So you're not providing any personal guarantee. If I'm using a non-recourse loan to purchase the property, it has to be non-recourse, so I have to use that specialized lender. And then I also need to be aware that there can be a tax applied to a portion of some of my profits. If I'm investing using leverage, I didn't have that money in my IRA to begin with. So when I start to generate returns on my investment, a portion of my rental profits could be subject to some income taxes. That's referred to as unrelated debt finance income tax, or UDFI tax. I'll get into that a little bit more, but just realize if I'm using leverage, there could still be some taxes on the leverage portion of my profits. I'll give you an easy example. Let's say you bought a $100,000 property, you had $60,000 available in your IRA, and you borrowed $40,000 in the form of a non-recourse loan. Now, when I'm generating profit, the leverage portion, 40%, could be subject to taxes. And this isn't meant to deter you or scare you. Jeff, I thought investing with my IRA, I get to keep all of my profits tax sheltered. Yes, that is true. So this isn't to deter you. You're still going to be able to build your retirement account. You just need to be aware of this tax that can be applied. As I talked about, unrelated business income tax, UBIT, it's a form of tax applied to the retirement gains. And again, this is specifically applied when you're using leverage to invest in real estate. The next type of investment I want to cover with you guys is using your self-directed IRA as a lender. So rather than invest into the real estate directly, what if there's a scenario where I have a friend or family member that's investing in real estate and they're looking for some capital to finalize their rehab? Maybe they don't want to go to a hard money lender and pay their very high terms. I could actually create a promissory note, an agreement between my IRA and that individual, and loan funds from my IRA. I can dictate whatever terms I want. I can't loan the money at 0% interest, never to be paid back. That would be a gift, not a loan. But as long as I have reasonable terms, I can create and structure that kind of agreement how I best see fit. Maybe I want some points at the beginning or at the end of the loan. I can dictate all of that. So promissory note investing or lending with your IRA is very common. Whether you're creating these notes from scratch or you're buying existing notes at a discount, promissory note investing and investing in loans is another great way to invest your account, build this retirement account.
Hey, Jeff, real quick.
Mentioned using an IRA LLC structure to grow the retirement account and to more easily manage the retirement account. I'm going to get into this as it pertains to investing in real estate. Let's say you wanted to purchase a property with your self-directed IRA and you were going to purchase a rental property. I could take title to that property in the name of my IRA account. And now each and every time I need to pay an expense, I facilitate that through the account and my custodian. So if I need to pay a utility bill or a property tax bill, I have to submit that expense to my custodian. They'll submit payment from my IRA. When my rent is being collected, tenants are making the rent checks payable to my IRA custodian so it can be deposited into my account. Now, it's not as efficient as managing things yourself through an LLC, and that's exactly what this structure here is going to accomplish. So in this scenario, we still have your self-directed IRA account here on the left. That IRA is first going to invest into an LLC that's been created. This LLC is not a boilerplate LLC you would set up on LegalZoom. It is a specialized LLC, and we have KKOS lawyers, the law firm where Matt and Mark are both lawyers, to help with this. I always tell clients you don't have to utilize KKOS services for this, but they're experts in the field. You can use any other attorney or any other counsel that you'd like. But really, we create an LLC, and you're now going to be making a private equity investment. So if you look at the investment from the perspective of directed IRA or custodian, you're not investing into the real estate through the account. You're investing first into a private company. Why would you want to do that? Because you as the account owner can be the manager of that LLC. Now that I have this LLC, I'm the manager of it. It's been funded with my qualified retirement money. I control the LLC and its business checking account. So I can write checks if I want to purchase property, send money for a note investment that I've made. I control the checkbook for this LLC structure. So really, you'll often see this referred to as having checkbook control over your funds. This is a very common structure that we set up for clients that are going to be investing, let's say, in a rental property. So they can now control collecting rent from their tenants, paying those utility bills, expenses. The assets that they're invested in through the LLC roll up under the LLC. That all rolls up under the umbrella of their IRA. So everything still remains tax sheltered for them, but it just gives them more control over the and more efficiently allows them to manage these assets that they're investing into. The LLC can also add an additional layer of liability protection. Many of our real estate investors would prefer to have these assets held in an LLC. So this just adds that additional layer there. We also set up a multi-member IRA LLC for clients. In this scenario, imagine if you had more than one retirement account. Maybe it's you and your spouse looking to pool money together to invest into real estate or into some of these alternative opportunities. By setting up a self-directed IRA for yourself, a self-directed IRA for your spouse or other friends or family members, you each have your own retirement account. It's an individual retirement arrangement by definition. So your IRA is separate from your spouse's. It's tied to you and your social security number. So you each have to have your own individual IRA account, but now we can use a multi-member LLC to pool funds together. Let's say that I have a group of family members that all would like to use retirement accounts to maybe go out and invest in an apartment complex or a real estate syndication. I create an LLC, and then I use the analogy, all of our investors jump in the pool at the same time. We basically take our self-directed IRA accounts, invest into this private company, and now we have capitalized that LLC. We have a managing member that controls its checking account, and that LLC can then invest into these underlying assets, real estate, notes, cryptocurrency, whatever it may be. This is a very popular structure for cryptocurrency investors. Once I have money in an LLC, I can use that LLC to go set up an institutional trading account with Kraken or Gemini or Coinbase or whatever exchange I want. So it allows me to have control of my cryptocurrency investments, invest in different exchanges. That LLC could also purchase a wallet, so I have control of the storage of my cryptocurrency. So this IRA LLC structure and this multi-member IRA LLC structure are really excellent for investments in real estate, and investments in cryptocurrencies specifically. For these small business owners out there, if you have a small business without any full-time employees, you may want to consider establishing a self-directed solo 401k plan. If you work for a W-2, you get a W-2 through your employer, and you're a part of a group 401k plan, think of the 401k plan as the solo 401k plan as a 401k plan just for that one business owner. They're both the owner of the business and the employee. So when they create this solo 401k plan, they can be extremely generous with the benefits that solo 401k is affording the members or the participants. If you have a 401k plan through your employer at work, they may match your contributions up to 3, 4, 5, 6%. Likely not going to match your contributions up to 25%. And that's exactly what can be done in a solo 401k plan. So with the solo 401k, you can make contributions over $50,000 a year. Currently for 2022, you can contribute up to $61,000 a year if you're under 50 years of age. So you can really get a large amount of contributions into these plans if you qualify for them. These plans allow you to be the trustee of the plan, so you have complete control over it. You'll have checkbook control of this plan by creating a trust bank account for the solo 401k. Now, again, you have to qualify for it. You have to be self-employed without any full-time employees. If you did have any employees with the business, you'd want to set up a group 401k plan. Can't discriminate against those employees and just have a solo 401k for myself. I have to make sure that if I have employees that are eligible to participate, they're not discriminated against. They can also be a participant in my 401k plan. But if you qualify, you don't have employees, solo 401k plans are a great structure to consider. Something to absolutely bring up to your accountant or your CPA to discuss establishing that for your business. Another great part about the solo 401k plan, it has both traditional and Roth components. So when I'm making contributions to my solo 401k plan, I can decide if I want to contribute after tax to a Roth component where that money can continue to grow tax-free, or I can contribute tax deferred and maybe receive a deduction or a write-off for my contributions. Depending on my situation and my finances that year, I can switch and change my contributions. Maybe I'm doing Roth contributions one year and traditional contributions another. So the plan has a lot of flexibility built into it. So it's a really great plan to consider for those that qualify. Now, all of these plans, that you set up, it really involves a 3-step process to get started. How do I invest with my self-directed IRA? Well, we have to create the account first and foremost. Once you have a self-directed IRA account established, that's when you're able to invest into these alternative assets. So if you have your IRA account or your 401k through your employer, you're likely going to have to create an account, move those funds before you're able to make these investments. How long does it take to open a self-directed IRA? It's an extremely easy process. Our applications can all be filled out online, electronically signed, probably take you about 5 to 10 minutes tops to open an account. So the steps here, we're going to first establish the self-directed IRA by completing the appropriate application. We'll then work on getting that account funded with a transfer or rollover or contribution. And then finally, we're going to invest the account. When we talked about traditional and Roth IRA accounts, we're talking about the tax treatment or the tax environment of those funds. So I talk to a lot of clients that say, well, Jeff, I have a traditional IRA at Fidelity. Great, we're going to set up a self-directed traditional IRA here and transfer those funds. Maybe they'll have a Roth IRA at Vanguard. Great, we're going to set up a self-directed Roth IRA here and transfer funds from that Roth account to the Roth IRA here. So we always want to keep that tax environment the same. Many of our clients, though, they're saving through an employer plan. They have a 401k, a thrift savings plan or TSP. Maybe they have a 403b or 457 plan through their employer. How do I get that money moved over to an IRA? Well, really the first step that those clients will want to do, or those individuals will want to do, is they'll want to call their plan administrator. So is this plan through your current employer or is it through your previous employer? If this plan is through a previous employer, I no longer work there. I'm no longer participating in that plan, making contributions, maybe getting a match from my employer. I can absolutely access that money and roll it to an IRA. If this plan is through my current employer, I have to do some more research. I have to see if my plan allows me to roll money to an IRA account. Not all current employer plans will allow you to move to a IRA or self-directed IRA. So each plan document is different. Each company, when they set up their 401k plan, sets up the rules about when these funds can be rolled to an IRA account. So the call you want to make is to your plan administrator to determine what steps do I have to take to roll this money to an IRA account. Chances are they're going to have you fill out a rollover form, and that rollover form is going to ask you, where are we sending these funds? Are we sending them to an IRA somewhere? Are we sending them to a new 401k plan that you're a part of? So you really want to make that call, get an understanding of, do you have access to roll this money out to an IRA or not? And if you do, what is the process? Is there a form I need to fill out, a rollover form? Obtain that form so you have that information. Now, we did talk about traditional and Roth IRAs. We always want to move to a like tax environment, and that's so we don't create a tax liability for ourselves personally. But for individuals that want to make that switch, they know that they would like to take any, let's say, tax deferred traditional IRA money they haven't yet paid taxes on. I want to switch that to a Roth IRA so that now my future growth can be tax free. I can make that switch, but it will require paying taxes on the amount of money that I'm converting. So it is definitely possible to do a Roth conversion of your funds. Many of our clients, once they see the types of returns they can generate from these real estate investments, they would prefer all of their growth to be growing tax-free in a Roth environment, but that may not be the account type or the environment they have right now. So to make that Roth conversion happen and to make that switch happen, they can absolutely do so. They would just have to consult with their CPA or tax professional to understand what that tax liability is before proceeding there. So we talked about the steps for opening the account, funding the account, investing the account. If you go to Directed IRA's website here, you'll see an example of this. You can open a self-directed IRA by completing one of our applications here. You get to our website here, you're going to see that you can open an account just by clicking on these links. These will take you to an application that can be electronically signed through HelloWorks. So all of our applications can be completed in about 5 to 10 minutes and electronically signed, which makes that process very easy. After you complete an application, within 24 hours, you're going to receive a welcome email with that new account number and instructions for setting up online access to the account. So we're going to include all the information that you would receive, so you have the ability to access the account, see your balances, see statements, and manage the account through an online portal. After the account is established, now we want to fund the account. This is where the rollover form is going to come in handy from the 401k plan administrator or the 403b, 457 plan administrator. We're going to complete that rollover form, and we're going to instruct our custodian or our plan administrator where to send funds. So we're going to provide our IRA account number. We're going to provide the address to our custodian so they know where to make the rollover check, how to make it payable, and where to send that rollover check. I will say that rollovers, they can take about 2 to 3 weeks to complete. Oftentimes it's a check being sent through the mail. So you can imagine that check coming to the mail. It takes a while for that check to be received, clear, and those funds to be available to be invested. So that's something that we'll just want to take into consideration. Opening the account can be done very quickly, but funding the account can take some time. For those individuals that have a IRA account that they're looking to transfer, slightly different process here. Rather than contact our plan administrator and fill out their rollover paperwork, we're actually going to complete our custodian's transfer paperwork. So here at Directed IRA, we have an account transfer form that clients will complete and return back to us. We will sign this form as a letter of acceptance and submit it out to their current custodian so that their current custodian knows that you as the account owner have authorized the transfer. We as the new custodian have also opened an account and can accept that money, and they'll then send funds to us. And you can specify whether it's a check or an ACH or a wire that they send to us. So when you're transferring IRAs to an IRA or when you're transferring, you're moving money from an IRA to an IRA. You have more control over whether it's a check or a wire, so it can expedite that process a bit more. When I'm rolling over a 401k plan, 99% of the time, it's going to be a check that's sent through the mail, and that can take some time. The other way to fund an account is just through a contribution. So as long as you have earned income, you can go ahead and make your $6,000 or $7,000 contribution to your IRA, or your solo 401k plan, as we talked about, has a much larger contribution limit. So these are really the three main ways of funding the account. Again, transferring IRA to IRA movement, rollovers, taking old employer plan money and rolling it into the IRA, or just an out-of-pocket contribution. The final step, now that I've got my account set up, I've got it funded, I want to invest. Maybe I'm setting up that LLC structure and I need to fund the LLC. Maybe I'm going to invest in a real estate syndication, or I'm going to buy real estate directly with my account. I want to instruct my custodian what I'm investing into. So to do that, we have what's called a direction of investment form. We refer to it as a DOI, but this is basically telling your custodian, this is the investment I'm making, this is the dollar amount that's needed, and here's the banking information on where those funds need to be sent. If I'm investing in a private fund, I'm going to have their banking information so I can tell my custodian, this is exactly where the funds need to be sent. Now, the direction of investment form, that's generally accompanied by some supporting documents. If I'm buying real estate, there's a purchase contract. If I'm investing in a private fund, I'll likely have some subscription paperwork or a subscription document that I need to complete. So those are the supporting documents that we as custodian will receive. We'll review those, make sure that the titling is correct, because again, it's not you as the individual making the investment, it's the IRA. So we'll actively review those documents, make sure everything is in good order so that we can fund this investment quickly for you. When should people get started? If you're interested in setting up a self-directed account and making some of these different alternative investments, you want to get started as soon as possible. You can't make an investment if you don't have your funds in a place to invest. I can't tell you how many clients I've spoke with that love the concept, would love to get started, but they want to find that perfect deal that they're going to invest in first and foremost. Unfortunately, if they don't have their account set up and funded, they aren't able to execute on that transaction in a timely manner. They may miss out on a great investment opportunity. So always a good idea to have your account open and funded well in advance of executing an investment. That way you're prepared. When should you fund your account? Well, you want to get started on the funding as soon as the account is open. As we talked about, transferring IRAs can take about 7 to 10 business days on average. Rollovers from old employer plans can take 2 to 3 weeks. That's not something that Directed IRA can control. It's something your current custodian or 401k plan administrator controls. So you want to make sure you get that process started quickly. The timeframes, they vary depending on whether funds are being sent as a wire or a check. So even if we've received those funds, they still may take some time to clear before they're available. So you want to take that into consideration. Get that account funded as quickly as possible. Once your account's open and funded, now you're in a position to act on these investment opportunities right away. So what forms do you need to complete to start this process? Again, you're going to complete our application, which is filled out online, electronically signed, takes minutes. You're going to fill out funding paperwork, either a transfer form, maybe a rollover form from your plan administrator, and then you're going to complete some direction of investment documents when you're ready to invest. We do get some commonly asked questions about, I have a self-directed IRA maybe with another company. I'd prefer to work with Directed IRA. And can I make that switch? Absolutely. You can transfer your self-directed IRA that you may have with a competitor or at a different company to directed IRA. You can even move over those investments in kind. So if you're already holding, let's say, an investment in real estate, you don't have to liquidate it. That can be moved over with the account. Clients sometimes have saved in 529 plans, and they would love the ability to self-direct that money and invest that as well. Unfortunately, 529 plans cannot be self-directed. That is not one of the account types that we support. And that's really because they're state plans. They're not federal plans. So unfortunately, 529 plans, those you'll just have to continue to invest in the investment options that they give you. What tax forms do we provide as custodian? Well, really, we provide a 5498, which is the value of your IRA account, and that's sent to the IRS each year. And then we also generate 1099s. So once you've invested these funds, you've built up the retirement account. If you want to personally take a distribution of that money for whatever reason, to go on vacation, to pay expenses in retirement years, you would take a distribution and we'll provide the accompanying 1099 that comes along with it. Our pricing for getting started with one of our accounts here, we have a one-time new account establishment fee of $50. And then we charge an annual self-directed IRA fee of $295. That's a flat fee. So regardless of the account value, you're going to pay an annual fee of $295. It's regardless of the number of investments you hold as well. So some of our competitors charge based on the overall account value. Some of our competitors charge based on the number of assets or investments that you're holding in the account. Here, our fee schedule is much more straightforward. It's a flat $295, regardless of, again, the value or the number of investments. When you make an investment, you're going to pay a one-time investment processing fee. And that's for us to do work to gather those supporting documents, review them, make sure they're in good order, and to send money out of the IRA for the investment. Our processing fees range from $30 for investments into precious metals to $100 for an investment into real estate. Investments into an IRA LLC is $50. Investments into private funds is $75. So again, each time I make a new investment, I'll pay my one-time investment processing fee to execute that investment. Now, we do want to offer some special pricing as a courtesy for the individuals watching this webinar. So for individuals that want to create a self-directed IRA here at Directed IRA, you can use the promo code ROQUE50, ROQUE50 for special reduced fees. We'll basically waive your $50 account establishment fee as a courtesy and a thank you for setting up the account with us. You'll pay your flat annual fee of $295, and then you'll pay your one-time investment processing fee, again, which can vary based on the type of investment that you're making. So again, just as a courtesy, happy to reduce our fees and offer that discount for getting started with Directed IRA.
I love that,
For
Jeff.
individuals that want to get started or have questions about their own personal financial situation or account situation, my contact information is here. You can contact me directly at the phone number and email provided. And I'm happy to go over again your personal situation. What retirement accounts do you have? Get you the correct 1, 2, 3 steps that you need to get started here, and determine, if a self-directed IRA is the appropriate fit for the investments that you're looking to make. Again, thank you, Princess. Thank you, Micah, for having me on here. I know we covered a ton of information on self-directed retirement accounts. But again, if anyone has additional questions or wants to discuss their personal situation, please contact us. Myself, our team here, we're happy to help out, explain further, answer any questions you have, and make sure you're set up with the correct account so you can invest in real estate, invest in cryptocurrency, invest in what you know and what you're comfortable with, and truly take control of your retirement account.
Well, thanks so much, Jeff. I hope you're good. I hope you're fine. I'm sorry if you were coughing at some point. I hope you feel better. Can you hear me?
Yeah, Jeff, that was fantastic. Yeah. Jeff, can you hear me all right? Do you hear Princess all right?
I mean, I could hear you, Micah.
I can hear you.
Okay. I hope. Can you hear us good? Never mind.
You have him on your phone?
Yeah.
Maybe check in with him real quick, because I'm guessing he's not hearing our questions here.
Hey, Jeff, can you hear us? Can you hear us good, Jeff?
I don't know why he's not hearing. This is unusual.
Yeah. Can you hear me, Mauricio? Yeah. I'm not sure if Jeff could hear us.
Send him a direct chat.
All right. Yes, I can. I'm back on. I can hear you guys.
Okay, perfect. For some reason, I can't hear you.
Great. All right. We're all together now. Jeff, that was awesome. Thanks. That's really exciting stuff. Princess, did you want to jump into any of the Q&A, or do you want me to fire off a couple of questions here?
Yeah, go ahead.
Yeah, mine initially is just to kind of tail off what you're saying there about, all your contact information and being able to call you up and ask these questions. Because for those who are new to this, I'm kind of wondering, like, how much hand holding do you guys provide? Trying to figure out what kind of account to set up, or once it is set up, questions about, how to make an investment, or, what needs to be done properly. Can you speak to that a little bit?
Absolutely. So if you go to our website, www.directedira.com, in the upper right-hand corner, you can actually schedule an appointment with one of our team members here. So what they'll do is they'll actually review your personal situation. They can go over what account types you have currently. Maybe you have a combination of some IRAs, some 401k plans through your current employer. Maybe you even have some old 401k plans that you haven't yet rolled to an IRA. So we can, have a discussion with you and basically lay out exactly what account types you would qualify for, and then give you the correct steps to open those accounts. So that's pretty common. We have clients that say, I've got a 401k, but I really need help determining, is it traditional? Is it Roth? Is it a combination of both? And I want to make sure that I'm setting up the correct account type. So very common for us to have those, consultations with clients, go over their personal situation, address any questions they have, and then give them a game plan and the next steps that they need for getting started. Here's kind of the 1, 2, 3 step process that they'll individually take to set up a self-directed account and begin investing.
Okay.
That's good to know.
That's super awesome. Yeah.
And we realize too, the funding process, that step in the middle of getting the account funded, it's helpful to know exactly what account type to create, but I may also need support with getting an account funded. So that step, I will say it really is on the client to drive that. But if they need support in how do I roll over funds versus transferring funds, we can help explain that. And we also can help with many of these companies we've worked with in getting money moved over in the past. So if you're transferring, let's say, an IRA from Vanguard, we have transfer paperwork that's kind of pre-filled with some of their transfer department information to make it that much easier for clients to move funds. So you can lean on our experience, not just establishing the correct account type, but getting these accounts funded properly in a timely fashion. So we do provide excellent support there as well. When it comes to investing, that's where the accounts are truly self-directed. Each individual client is going to make their own investment decisions. So we don't provide that investment advice, but we can help execute on those transactions. And again, make sure that they're done properly, they're titled properly, and that we have all the information we need to go ahead and make that investment for the client.
Right. Perfect. Yeah. It's just for most people, writing a check on behalf of an IRA is not something most people have done. So I can imagine you guys get lots of questions of, am I doing this right? So that's awesome.
Absolutely.
You guys offer the
Yeah, if
support.
they need reassurance along the way, we can absolutely help with that.
Great. I have the next question. So, is there a
Awesome.
maximum amount that you can use for investment in any form of the options that you mentioned?
Great question. So the maximum amount that you'd be able to invest is what's available in your account. So essentially your account balance. So if you have, let's say, an IRA that you're looking to transfer, you can transfer the entire IRA balance if you'd like, or just a portion of it. When you're rolling over funds from a 401k plan, you'll have to check with your plan administrator, but depending on the amount that gets rolled over, and that's the funding amount that's in your account, the balance that you have available, that's what you have available to invest. So for many of our clients, they're able to, let's say, transfer over an IRA account, roll over an old 401k plan. Now they have access to invest that entire account balance. So there's no balance that needs to kind of be maintained in the account here. They can invest 100% of those funds into these different alternatives if they'd like.
I see. That's good to know. And I have a question here. Does this
And then
differ
do you guys
with?
have a,
Look, can you hear me?
sorry, go ahead, Princess.
Oh, no worries. Yeah. So, does this differ with a qualified retirement plan?
Great question. So I know you mentioned in the chat here about the QRP, Qualified Retirement Plan. That's really another kind of acronym that's out there for a solo 401k plan. So a QRP stands for Qualified Retirement Plan. It's kind of a general term that could apply to an IRA, could apply to a 401k, any type of qualified retirement plan is considered a QRP. Now, there is one company in particular that refers to the QRP as kind of a special type of retirement account. Really, at the end of the day, it's the same thing as a solo 401k or an individual 401k. It's a 401k plan for small business owners that don't have any employees, so they don't need a group 401k plan. So a QRP is like a solo 401k. That could be, as long as it's self-directed, that could be invested into all these same different investment opportunities.
I see. Okay. Micah, do you have your next question?
Oh, I was just curious if you guys have a recommended, maybe not necessarily formal, but recommended minimum amount for funding.
I think it really depends on the investment that you're making. If I'm looking to start an account with a new contribution and just put in my $6,000 maximum contribution since I'm under 50 for 2022, it's going to be difficult to find real estate opportunities that I can invest in with $6,000. But cryptocurrency, that's something that I could get involved in with a very small dollar amount. So it really depends on what the investment strategy will be. But we do have clients that are saying, well, I may not have enough to invest in buy a property outright, but if I use a non-recourse loan, now I may be able to invest in real estate with my retirement account. So I think it's really dependent on each individual situation and the amount that they've been saving in their retirement account. For individuals getting started with a new contribution, they're generally getting involved in small dollar strategies like cryptocurrency or tax liens, something of that nature. For those that want to do real estate, they generally have been saving in a retirement account, IRAs or 401ks elsewhere, and they're rolling over or transferring that larger balance so that they can have the available balance to now execute a larger dollar transaction, purchase a piece of rental property or invest in a real estate syndication that has like a minimum $50,000 investment, let's say. So each individual needs to kind of have that investment strategy in mind, and then fund their account appropriately with enough money to execute on those investments.
Perfect. Thanks, Jeff.
I have one more question. So, is SDRP as a lender, when you use it, is it subjected to tax also?
It's a great question. So if you're going to create a promissory note or lend from your retirement account, the interest that's paid on that investment is paid back to your retirement account. So it's not paid to you as the individual, it's paid to the IRA, and that's a return on investment. So that is tax sheltered. And that's really the entire reason for using the self-directed IRA for these investments is the tax treatment on the profit. So if I'm, lending money out of my IRA, receiving interest or points or a balloon payment at the end, that's all return on investment, and that's all tax sheltered back in my IRA. So no, it shouldn't be subject to taxes. Now, if I'm using a traditional IRA for that investment, the returns on that investment are going to be tax deferred in that traditional IRA. If I'm using a Roth IRA for that investment, my Roth IRA account is growing tax-free, so my returns are tax-free. So that's something important to keep in mind as well. When I'm making these investments, let's say as a lender, am I using a tax-deferred traditional IRA or a Roth IRA account? If I'm using my solo 401k or my QRP, as it's sometimes referred to, am I using the Roth component or am I using some of the tax-deferred component of the plan to make the investment? So that's going to determine the tax treatment, whether it's completely tax-free or if it's tax-deferred back into the account. But it's not going to generate any immediate tax liability to you as the individual.
I see. That's really good to know. And I have one more question. So is investing in my spouse, because you mentioned about the disqualified person, right? Is investing in my spouse investment considered a disqualifying event?
It would. So if you're going to invest, let's say, in your spouse's business, or you're going to purchase an asset that your spouse owns, they are considered a disqualified person. So your IRA would not be able to transact with that individual. Now, if I'm looking to co-invest with my spouse into, let's say, a real estate syndication, that is possible through that multi-member LLC structure that we talked about. So when I'm creating a multi-member LLC, we use the analogy, we're jumping in the pool at the same time. Me and my spouse are going to co-invest together into this investment. So there'll be divided interest in that LLC. What percentage is owned by my IRA? What percentage is owned by my spouse's? So there are ways to invest, co-invest along with the spouse into investments, but I cannot transact directly with them.
I see. Well, thanks so much, Jeff. It has been a very good discussion and a lot of, great things that we didn't know, especially for us as a syndicator, that we can actually, partake and give that information, or at least a little bit of information to our investors out there. Micah, do you still have another questions?
No, I think that does I do, but I could probably talk to you for hours, Jeff. So I'll save them. That was amazing content. Thank you so much. Super exciting stuff.
Well, sure, Micah, feel free to give me a call. We'll talk about your personal situation, get all those questions addressed. Happy to discuss it with you further. And thank you, Princess. Thank you, Micah, for having me. This was wonderful.
No worries. So just before we head out, we just wanted to invite everybody to our next event. That would be a limo tour event on June 4th. It will be a Saturday. This is an in-person event. We will tour the investment properties that we acquired in LA, and also you get the chance to see opportunities in multifamily investing and be able to meet and greet professionals in the business. So we will send out invites in our Facebook group and emails, and this is a free event. I'm sorry, it's not really a free event. It's actually it's a paid event. So feel free to share it with your friends and family about the good news. So you can check out the events section also in our Brickstone Investment Group website for more details. But then again, thanks, Jeff. We will post, or we will send out the recording of this discussion of this webinar, and we appreciate your time and for making this a successful event.
Oh, thank you, Princess. Thank you, Micah.
You're welcome. Thank you, Jeff. See you guys at the limo tour.
See you. Bye. Thanks.